Hi everyone, welcome to Quantsapp and welcome back to yet another video. Today we will learn how to use option chain data for our trades, and eventually what we will learn is how can we combine option chain data along with charts for our directional trades. So do check out the video till the very end, and also option chain and charts update in real time in Quantsapp and you can access it for free. So for everybody who has signed up with Quantsapp has access to real-time option chain data and the charts. So let's start. So to open option chain, what we can do is we can use the search panel straight away and just search in the search panel chain, or else you can just directly open it from the home screen from here itself. Now search for your desired instrument, let's say Nifty, and let me just select next expiry because the August expiry is concluded. So this is 7th September expiry for Nifty. So now the way I analyze the option chain is really simple, wherein I don't keep it very complex. Wherever I see huge number of call writers, that will act like a resistance for me. And wherever I see huge number of put writers, that will act like a support for me. So now, whenever I'm creating trade in Nifty, Bank Nifty, or any instrument, okay, for that matter, be it even a stock as well, as obviously when I'm talking about options trading, I will look out for those stocks which are really liquid in FNO. Now, what this tells me is 19400 strike price has the highest call open interest. So most importantly, this level will act like a pivotal resistance for me. So wherein whenever I am going to take a bullish trade, so I will make sure that Nifty actually sustains above 19400, which will tell me that all these call writers who have sold 19400, they will get trapped and eventually the market might move up higher from there, right? So whenever I'm going ahead and creating a bullish trade, I will wait for the resistance to get cleared. That is the number one criteria. And then eventually if it sustains above the resistance, that is where my bullish trade will get activated. So this is scenario number one. Scenario number two for a bullish trade would be wherever I see huge put writers. So as of now, I'm getting to see huge put writers at 19200. So if Nifty reverses from 19200, what I mean is, let's say Nifty falls from 19350 to 19200 and then it bounces back from 19200 to let's say 19250. That is the time I would say that this support at 19200 is getting respected, and from here we might possibly see an up move. So again, to repeat, two scenarios where I will create a bullish trade. First scenario would be above the resistance, or the second scenario would be when the instrument takes a support at the highest put open interest strike price. And now vice versa for the sell trade. So if I want to go ahead and create a bearish trade, it would be just below when the highest put is getting broken and the instrument sustains below that, or else whenever the instrument reverses, whenever it distances, or you can say it whenever it retraces from the highest call strike, that is the time I would prefer to create a bearish trade. Now this data, right, option chain data, it will keep on changing time and again. So whenever we are going ahead and using option chain data, also observe the change in open interest. So in bracket, you will get to see how the open interest is changing. Okay. So over here, if you see 24 lakh shares are added today. So similarly, you will see on various strike prices how the shares are getting added or unwinded. So whenever you are creating a trade, so let's say if I want to create a bullish trade when the highest call is getting broken, I want these call writers to get unwinded. So what I mean is, so let's say first, when the highest call is getting broken, so at that time, let's say the open interest was 24 lakhs. Okay. Now Nifty actually breaks the highest call strike, and let's say the open interest turns out to be, let's say for an instance, 12 lakhs. That means the open interest has unwinded, right? The open interest has got reduced. So I want to see that. So for that, we can simply observe this particular zone, like this particular OI change, and we will get to see if the OI is getting added or unwinded. Then obviously if the market sustains higher and if the call writers unwind, that would be a bright possibility for me for a bullish trade, and vice versa on the bearish side. Now how can I combine this data along with charts? So let me navigate to chart. You can do it directly from here, or you can come to the home screen and just search for chart. Okay, so you need to access this analytic, which is charts order and trade. So Quantsapp offers real-time chart for everyone. So the order book indicators obviously which give us an edge for intraday trading, those come under Pro Plus plan. But if you want to access the normal charts, everybody who has signed up with Quantsapp, he can access it. Now the scenario is, so this is 1 minute chart. So how I look at it is, I don't do a lot of complex analysis over here. So let's say Nifty and the option chain data, let's assume that it has given me a bullish signal that the market is sustaining above 19,400. Okay, well and good. Now when I will create a trade, on the bullish side in Nifty is basically when this high is getting triggered, when this high is getting broken. So the moment this high gets broken, right, I can possibly say that all the resistances which existed, those are getting cleared and there might be a possibility of an up move happening in the instrument. So that is how easily we can do it. Apart from that, we can also, okay, my bad. Let me just plot it on daily. Okay, so my bad. I actually plotted a 1 minute chart. But anyways, see if you clearly see it, where the support is of Nifty. So the support of Nifty is exactly where the highest put strike is, 19,200, and the highest put strike is also at 19,200. So if I see that the market rebounces from this, okay, if it bounces back on the upward side after testing 19,200, that is the time I can again say that okay, there might be a possibility of an up move. If not, then I would take a small stop loss and I would exit. Okay, so that is how we can do it. This is one way, or the other way around is that the moment this high is getting taken out, that is the time where I can create a bullish trade, wherein I can manage a very tight stop loss of this low maybe, and the moment that low is taken out, then I can again exit. Or else the candle at which I am taking the trade on, I can consider the low of that candle as my stop loss as well. So we can do it that way as well. Okay, apart from that, there are a number of indicators which we can use, and easily we can go ahead and identify directional trades in the market. Same thing can be done on Bank Nifty or any other stock. Okay, so let's say Bank Nifty. So highest put strike is at 44,000 and the highest call is at 44,500. So you can simply plot Bank Nifty chart and analyze the risk, like how much risk are you taking in front of the reward, and eventually if the opportunity sounds lucrative, then we can try to capitalize on that. So do check out option chain and charts and do this analysis, because this is very easy, and the best part is everything is updating in real time. So we will be ahead of the curve, wherein we are not going ahead and keeping anything complex. It's very simple that whenever I want to create a bullish trade, so and so would be possibilities. If the opportunity exists, then obviously we can try to go ahead and capitalize with taking a stop loss as per our own risk appetite. And yes, folks, that was it from my side. Thank you so much. Do check out the link which is there in the description box below to access option chain and charts.